Good afternoon and welcome to the Channel Final Bell on the Rural Radio Network. I'm Chad Moyer. My guest on today's program to break down today's markets, it's Arlan Suderman with StoneX. Arlan, thanks for visiting with us again here today. Just quickly, take a look at the settlements here. We're going to end corn settling, call it steady to down just a little bit. July was down 1 3/4, but December corn settled only a quarter penny lower. July soybeans down 7 1/4, and new crop November was down 2 cents. Bean oil was slightly higher. Soybean meal was down about $1.50, and then Kansas City wheat, July was down a penny, but September was up a quarter. First of all, one thing I noticed in today's markets, Arlan, is they went back and forth across unchanged throughout the day. Kind of a narrow swing today. What do you make of the attitude of the markets today?
Yeah, the grain and oilseeds really seem to be marking time ahead of tomorrow's big USDA WASDE crop report. It's expected to be a quiet report, but that's not what gets traders. What gets them is when they're leaning the wrong way and there's a big surprise. So they'll always kind of try to be cautious ahead of those reports. Overall, I think in tomorrow's reports we may see USDA increase its corn export target another 25 to 50 million bushels, maybe even tweak its soybean export target for the old crop as well, maybe a little bit higher. Probably not a lot of other changes. They may make some adjustments to South American corn and soybean production estimates, and those actually could be a little bit higher. We're hearing some good yield reports from the early part of the corn harvest in Brazil. I was just talking to Brazil here a few minutes ago, and some of the early corn yields are coming in over 100 bushels per acre, which is well above trend for them. Remember, they harvest 2 crops a year from many of their acreage, a soybean crop followed by a corn crop, and this is the second crop, the corn crop, that they're looking at right now. So not a lot really to support this market, with the near-term weather being supportive, but traders really wanting to be cautious ahead of tomorrow's report.
All right. Well, let's talk about some news items that we got early in the day before the day session today. One of those was the big announcement that apparently there's an agreement, or at least a framework, maybe as people are calling it, between a trade between the U.S. and China. I don't feel like this is what everybody was waiting for, Arlan. What do you think?
No, and there's going to be more. I think this is. I think China and the United States are further apart today than what they were 2 months ago on many, many issues. But when you look at both China's approach to these negotiations and the Trump administration's approach to this, whenever they have high-level talks, they always come away with something they can agree with. They've developed a relationship of respect between the two negotiating teams and between the two leaders, President Trump and President Xi. And so when they come together, they look for areas, okay, where can we find a segment where we can agree on something? And they focus on that, and they come out with an agreement. And it's announced as a trade agreement. Well, it's not a trade agreement as we've come to think of trade agreements per se, but it's an incremental step towards something maybe bigger. That big trade agreement that we all think of from the past, probably a long time away, months if not a year or two away, if that. So there's a lot to be worked through before we get that. But they are making progress, and I think that's the positive here that the market has, overall, the outside markets have responded to. What this one does allow the continued build on the rollback of tariffs that happened back on May the 11th. It puts U.S. tariffs at 55%. That's a 10%. You get to that 55% by having the 10% reciprocal tariff still in place. The 20% fentanyl tariff is still in place. And that could go away at any point if China would just close off the fentanyl that flows into the United States out of China. And then a 25% for other tariffs that were already in place before this all started. That's how they come up with the 55%. That still makes it pretty difficult for U.S. commodities to go into China with the 10% they have on top of their tariffs that they charge everybody. That still makes our beans and corn and wheat expensive relative to alternative sources. So we're not expecting this to result in any big exports. The hope is that one day we will be at a spot where they agree to buy a lot of U.S. commodities, energy and ag commodities, in exchange for getting favorable tariff treatment, meaning that 55 rolled back closer to zero, for access to our massive consumer market. That's what they really want. We're not at that point. I don't think we'll be at that point very soon, but that is the goal, to eventually get to that point.
Arlan, what do you make of the ethanol production numbers? A record high number in production, and I also noticed that stocks were down at the same time production was up. That must mean pretty good usage out there, huh?
Yeah, pretty good usage. We had a lot of gasoline blending last week. The gasoline numbers have been very volatile, meaning up and down. Erratic maybe is a better way to say it in recent weeks, but good blending over the past week. Record high production number of ethanol. That was supportive overall. We're seeing that exports have started to slow down. Year to date, ethanol exports are above last year's level, but over the last couple of months, exports have really slowed. And so we need to see those pick back up once again overall to keep those stocks in check overall. But that's another area where corn demand that overall has been solid this year in addition to exports.
Yeah, all right. Arlan Suderman, Chief Commodities Economist with StoneX, our guest on today's program. Stay tuned. In the second half of the Channel Final Bell, we've got a lot of other things to cover. We'll talk a little bit about the interest rates, where inflation is going. We had some data out with that earlier today. We'll look at what's going on over in the livestock as well, cattle futures versus cash. That and more coming up. Stay tuned. You're listening to the Rural Radio Network.
When you're a farmer, tomorrow always brings a new challenge. Unexpected weather, invasive pests, volatile markets, the list goes on. But with the enhanced Channel Seed brand's top-performing products, innovative digital tools, and expanded agronomic support, you can rise to meet them all. Channel Seed, let's rise to the challenge. And catch our new Channel Nebraska podcast on Apple, Spotify, or wherever you get your podcasts. Read and follow pesticide label directions, IRM, grain marketing, and other stewardship practices.
Here again, Arlan Suderman from StoneX on today's program. We talked about a number of different things in the first half. Now here in the second half, I want to touch on something that I know you follow very closely, Consumer Price Index, and how that translates into interest rates and inflation and things like that. The latest data that came out today, what does that show?
Well, it really shows for the month of May, the headline inflation number only went up 0.1% on the month. And when you look at core, taking out energy and food, which tends to be more volatile, it was also up just 0.1%. So that was less than what the analysts or economists had anticipated. When you look at the year-on-year data, we're still above that 2% mandate that the Fed has, but we did not go up like what analysts had anticipated. They were looking for the tariff war to start showing up in those year-on-year numbers as well as the month-on-month numbers. We just didn't see that. You saw it when you broke down all the data, you'd see it in a couple of areas, but it just didn't show up. So Wall Street overall was thrilled with that. Now, it still may show up in future months, probably will to some extent, probably not as much as people originally feared, but it will show up. But for now, it means that we're not seeing that big inflationary push. That improves in the minds of Wall Street the odds that we will see rate cuts later this year. And so Wall Street reacted very strongly or very positively to that this morning. We came back off of those highs as we got into the afternoon session, but overall Wall Street was encouraged. That helped support crude oil prices. When you combine that with the agreement that we talked about that was signed with China, that overall improves the economic outlook for both the United States and China. And so the crude oil market is now pushing the new 2-month highs on that information. So overall, inflation staying relatively calm for now.
All right. Let's see what's going on over in livestock here. On the mercantile, I noticed that most of the cattle futures were actually lower today, a couple of exceptions here and there. But at the same time, feels like we're establishing some cash trade out in the country, again, at higher money. I got these two things going different directions, Arlan. What's your take?
Yeah, we're still very early in the cash trade, but it looks like that once again. We had some the early ones that have traded have been equal to last week or a little bit higher, and the feeders still holding out for higher money. Pretty impressive what's been happening with these markets, setting record high cash prices overall. 244 last week in the northern feedlot district. Just amazing prices when you look at it. The slaughter pace has been solid, even though packer margins have been deep in the red. It looks like they have some significant orders for demand for here Father's Day weekend barbecuing, 4th of July barbecue demand coming up, and that they're trying to meet. So they're speeding up the chain speed to try to produce enough to meet those contracts, fulfill them. The question is, and I think that's why we saw weakness overall beyond the nearby June contract for live cattle and weakness in the feeder cattle market, is what about beyond that? Will the demand be there at these prices beyond that? When you're trading at these high price levels, you start getting feeders who start getting nervous and start hedging future production. You start getting fund managers start to take some profits, worried about the higher you are, the more vulnerable you are to the downside. And so the market very skeptical right now, but afraid to really truly sell off because the cash market just keeps going up.
Yeah, but it is nice to see hogs having a positive day. It feels like they're maybe starting to get a little footing under them, huh?
Yeah, they really are. And you look at the product market is strong, the cash market is strong, and the weights are coming down. The carcass weights are coming down, which means that we're pretty current overall. And so some of that may be the high beef prices getting a little bit more demand for the pork, but overall protein supplies are amazingly resilient right now at these price levels. And I think a big piece of that is the fact that we've got to focus on diets right now in the United States that focus on protein over carbs and fats. And so overall, the demand for protein remains resilient with the consumer.
Yep. All right. Just very quickly, you mentioned the WASDE. We get that tomorrow, middle of the morning. Any additional thoughts about that, or what else do you think could affect trade here in the last 2 days of the week?
We're continuing that in the WASDE, and also I think we're continuing to watch those weather forecasts. We keep on seeing indications that maybe 2 weeks out we may see some high pressure develop over the Midwest. It hasn't happened yet, but when you get to this time of year, that's something corn and soybean traders are certainly going to be focused on.
Yep. Arlan, give us your contact information for folks that would like to follow along.
StoneX.com or over on X, formerly Twitter. My handle is Arlan, ARLAN, FF101.
All right. Arlan, it's been great to have you on. Thank you so much. Arlan Suderman, Chief Commodities Economist at StoneX. Do remember, trading of commodity futures and options does involve substantial risk of loss and might not be suitable for all investors. That is today's Channel Final Bell. It's brought to you by Channel and your local seed pros. Here on the Rural Radio Network, Chad Moyer reporting.